Donchian Channel Scalping. Donchian Channel Scalping is a trading strategy that uses Donchian channels to identify short-term breakout opportunities in the market. This method is popular among scalpers who seek quick profits from small price movements. Here's how you can use it effectively. 1. Understanding Donchian Channels. Donchian channels consist of 3 lines. Upper band, highest high over a set period, for example, 20 candles. Lower band, lowest low over the same period. Middle line, the average of the upper and lower bands. 2. Setting up your chart. Time frame, use a 1-minute or 5-minute chart for scalping. Donchian channel settings, typically, a 20-period Donchian channel works well. Additional indicators optional. Moving average, for example, MA9 to confirm trends. RSI or stochastic for overbought/oversold conditions. Volume indicator for confirmation. 3. Entry-exit rules. Entry buy. Price breaks above the upper Donchian channel. Confirm with increased volume or a moving average crossover. Enter at the breakout candle close. Entry sell. Price breaks below the lower Donchian channel. Confirm with volume or a moving average crossover. Enter at the breakout candle close. Exit take profit stop loss. Take profit, 5 to 10 pips or based on previous resistance/support. Stop loss, just below the breakout candle for buys or above for sells. Trailing stop, use the middle line of the Donchian channel to protect profits. 4. Risk management. Use a 1-to-2 risk-reward ratio to ensure profitability. Avoid trading during news events high volatility. Limit trades to only high probability setups. 5. Tips for success. Stick to highly liquid assets, euro to US dollar, pound sterling to US dollar, Nasdaq, etc. Practice the strategy before using real money. Consider using an automated bot or alerts for breakout signals.
Thanks for watching.